Hey, what's going on, everybody? Sorry about that. Just warming up with some slides. Welcome to episode 14. Now, this will be the best episode ever. Why? Because that's my prediction. And why is it my prediction? Because there's no better timing for what's going on in the market than tonight. I had the light bulb moment. Why? Because I realized that a lot of you are stuck in these tough positions and you don't know what to do, and your stock's down 20%, 40%. I've got the solution. And I'm going to share it with you, and we're going to talk about each one of your stocks, and I'm going to take the time, and this tonight's to answer you guys. So real quick, let's do the market wrap-up real quick. So the Dow looked extremely strong. As weak as the NASDAQ looked for those 8 straight days, if you look at the Dow, demand is there, the volume is there. It's actually scaring me because it's spiking a little. It reminds me of Wynn, which I traded a lot of times last year. So the Dow looks a little frothy. Doesn't mean it can't continue. There's certain aspects of the Dow that are lagging, maybe like airlines, cruise ships, casinos, some material plays, some steel plays. So it could still go higher, which is why the demand's there. So I expect the Dow actually, now that I'm thinking about it, to run for a few more days. So I'm not saying cruise ships, airlines, they're all going to run for a few days because they struggled today, okay? But I'm saying like material plays. I've mentioned NUE. I think that can actually run to 100. All right, I think we're at 95 now. Could have gotten the same options that I have this morning at $7, and now they're $10. So that's a 50% gain, 10.50 actually. So that's 50% gain. All right, but let's go on real quick. So the Dow looks as good as the NASDAQ looked bad for the past few days. So that's the good thing, all right? Just be cautiously optimistic. Watch your Dow stocks, all right, going forward. Now, here's the good news. Tech. I saw the turnaround today. I saw certain trackers that I've been following that have been beat up so bad. And then we saw that final dip today, and I started buying. I started buying a lot of positions and averaging down. So if you see my spreadsheet and you're part of my platform, and if you're not part of my platform, it's 349trading.com. It's $3.49 a week. I give you my predictions. I give you my alerts. You see my spreadsheets, but that's not the point. So if you see my spreadsheet, all of a sudden you'll see new yellow positions adding up all over the place, and I'm averaging down on live positions. Now, the good news for you, anybody that hasn't seen my spreadsheet, tomorrow, 4:30 p.m., we're doing a Friday wrap-up where I'm going to go through my entire spreadsheet. I'm going to go over the closed positions, why I close them, the open positions, what my price targets are, if I'm going to lower them, raise them, when I think they're going to be hit. So it's going to be extremely informative tomorrow. But with that said, the NASDAQ is not going to turn on a dime. So if you're like, oh, it's turning, great, momentum's great, we're going to have 9 straight winning days. We're not. The market's still going to struggle. So what I'm going to suggest is, same as always, when we peak at certain points during the day, sell off, buy back cheaper. So some of the solutions tonight are going to be like, okay, somebody mentioned like EBON I see. So EBON, when it spikes, like today, I think it was up like 15, 16 cents at some point real early in the day or something to that extent, a couple cents, 5 cents, 8 cents, sell it, you buy it back cheaper. Somebody did that and has been doing that for the past 3 weeks, and their average was over $6, and now their average is $3.80. Again, it's still higher than where the stock is now, but they keep scalping it. So that's just one solution, but that's not what I'm going to talk about. I added the positions. I spoke about that. Best thing ever. Okay, real quick, since I'm going to be speaking about options tonight, I'm going to tell you 4 misconceptions. People get worried when you talk about options, but real quick, 4 misconceptions about options. Number 1, they're extremely risky. They're not if you play it the right way. All right? Options are confusing. They're not, and I'm going to explain why. All right? You need a lot of money to trade options. That's not true at all. And number 4, you've got to be extremely sophisticated to trade options. And only people that understand the Greeks, gamma, beta, delta, theta, vega, then they know how to pick the options the best. That's not true. Most important thing with your options is the direction of your stock and the timing and the entry point. So I'm going to share some examples later that you guys provide me, and I'm going to tell you what I would do in your case. All right? Let's see what else I have for you guys tonight. The options. Oh, real quick. Anybody watching tonight? Congratulations. I'm going to give you my alerts early, okay? CSIQ, Canadian Solar. I got out at 46. It's under 40 now. I saw the demand. The stock was a little green today, which was good for green energy. And it was actually green after hours, which I generally don't care about. But that stock has been beaten up after hours. Neo, Plug, they all went together. First Solar. So I'm seeing the demand come back to Canadian Solar. So I actually mentioned that in a tweet today to Kathy Wood. I'm hoping when it fires up, she'll reach out to me, see if she wants to work with me. Okay, another stock like that. Root, ROOT. It's on my spreadsheet. Again, it had a strong day in a tough market. And then what do we see after hours? It's actually up after hours. It was up more, but people are hesitant. So people are going to take profit. So if you see a stock like your spike and you're like, oh, great, it's going in the right direction, and then there's a sell-off, it's because people are scared they're taking profit. One of my favorites right now, and I'll explain why later, is Plug. And I still believe in it. And I saw the buying today, so I'm happy about that. Jumia, huge buys today. I tweeted about that after hours as well. And then it turns out Citron, Andrew left, I think, took a major position. But I saw it. I saw an institution taking a major position in Jumia. Now, I sold that on my spreadsheet at $30 a few days ago when it was going down. I was like, it might go down a lot today. And it did. It went down to like 26 or even 25 that day. So I'm not like touting anything. I might get back in. It's like 27 now. So if I get back in and I sold at 30 and now it's 27, I'm going to increase whatever position I have by 10%. So if I had 1,000 shares, I'll now buy 1,100 shares. So I'm going to increase my portfolio. So it'll add up and compound over time. All right. So that's about options. So let's go. I'm going to help you guys. Oh, actually, let me kick off some slides real quick before we get into, because I want to give you guys as much time as possible. So let me just get this slide up. All right. So right here, Carnival. So I saw it and I highlighted the 3 bottoms that I saw in Carnival. Now I zoned out for this one. I zoomed out. It's a 3-month chart. And even if I called the bottom wrong, my downside is limited. I figured the worst case scenario, it might lose like 40 cents, something to that, but maybe it'll turn around. And I think I called the bottom because now I think we're up close to $26 after hours. So let me just go to the next slide. Again, it's all about calling the bottom. Square, I took a shot. They were reporting after hours. They crushed it. Square's only up 2% after hours. I'm shocked. I thought it would be up like 8%. I'm still counting on tomorrow, especially if the NASDAQ is strong, which I think it will be. Now, I'm not saying it's going to go gangbusters again, but we just turned the corner. So there are going to be people that are aggressively buying tomorrow, and there are going to be institutions that are still scared, and they're going to sell into the buy. So it's going to be up, drawback, which is a good sign. If we see steps, very good sign. All right, let's go to that next slide. Okay, so I mentioned this morning again, and I'm sorry. It's completely my fault that I mentioned this a week ago also. The SQQQ, the TQQQ, the SDOW. So this morning, finally, I was like, listen, if you think tech's going to fall, which it's been doing, we should have been in this for days, but I'm going to take a position SQQQ. A couple other people followed me in. I sold my position. I almost flipped it because I thought tech was actually going to finish strong. At 2 o'clock, I tweeted that I think tech is actually recovering. I think we're turning the corner and we need to finish above a certain point. And what happened, not only did tech go from minus whatever it was, 30, 40 points, and it needed to finish minus 16 for me to be happy, but I think it finished plus 50 points, which is just huge. So I should have took the other side of this after. It's great to trade indices like this because you can make 40%. You could hop on the other side. And as long as your market timing's right, which we've been killing it, we understand the morning dip. We understand the lunchtime dip. So maybe instead of stocks, we're going to focus a little more on these type of ETFs and options around them. So I'll give alerts out. And somebody mentioned the alerts are tough to follow along. Yes, our alerts are like 5 minutes slow on the app, which sucks. Used to be good because 10 minutes after Matt gives an alert, the stock goes down. I'm not sure that's happening anymore. I'm calling things better. So I update my spreadsheet. As soon as I make a trade, I update my spreadsheet. So if you check in 3 times a day or you're curious and it's like 11:15, you want to see if I did anything, check the spreadsheet first. Always check the spreadsheet on the app first, okay? And again, tomorrow, 4:30 p.m., when I do my wrap-up for everybody that's new, I'm going to go through my entire spreadsheet. Open positions, closed positions. I'm obviously going to spend more time on the open positions, where my price targets are, and when I think they're going to be hit. All right, let's go on to the next slide. Because again, I want to get to all these questions because I want to help people tonight. Okay, OCGN. Remember a week ago, they did their offering, and I said offerings suck 99% of the time, if not 100% of the time. And this is the only offering I've seen the stock go up. So it rode up from $11 all the way to $16 the next day. Now, if I was smart, I would have suggested puts. But there was so much demand for the stock that I was like, I'm wrong. I guess it's only 99% of the time, not 100% of the time offerings. But now if you look at the stock, what happened today? And again, bad day, went under $10, which people said, oh, the offerings at 10, it can't go under 10. But I told you, it can go up to 10% under the offering usual. So I thought it could go all the way down to 9. It's 9 and change. I know some people are in it. I sold at 10 and then it went back up to 16. But I was happy that I was out at 10 and someone said, are you going to jump back in? And I said, I don't know where the bottom is. And that's true. I don't know where the bottom is. Okay, let's go to the next slide, please. Oh, we're done. Excellent. Okay, so that's it. Carnival today, just wanted to mention that I jumped into Carnival today. Carnival options, it was that or Delta because I was kind of wavering, but I know Carnival's been beat up. And I do believe the cruise ships are going to come out with some news sometime soon about how they're going to be able to cruise again. The Florida governor, even though I live in Florida, he's a little whacked, man. But I think he's just like all business. He really doesn't care. He wants to open up the state. He wants to do everything, which is great. I'm all for it. Let's do that. Let's get businesses back in action. Let's do all that good stuff. QQQ, OCGN. Oh, Roblox, okay? I bought one more thing before the question. I bought Roblox today at 65, like 86, and then it went down $2 more, like 3% more since I bought it. Now, I entered into a pretty substantial position. I bought 1,000 shares. Now, why did I buy Roblox? Someone mentioned GNUS does something similar or even participates on their app. I bought Roblox because to me, it's best in class. My kids use Roblox. Their friends use Roblox. I read a survey that said like 67 or 70% of kids from 2nd grade to 6th grade are using Roblox. Now, I don't give my girl any money to put on Roblox. My ex-wife gives her some money. We have friends that are very wealthy, and they give their kid $1,000 per year, and then the grandparents give $200 for the birthday, 100 which goes on Roblox, 100 which goes in her account. So you think all these things aren't happening to every family? They're all across the coast. So when Roblox reports earnings, which is coming up May 10th, that's why I jumped in. First of all, I know Kathy Wood likes it. I know she's a big supporter of it. I know that Deutsche Bank came out, I think, and they said price target 78. And keep in mind, it's like 65 right now. So they said 78. Again, the market's been beat up. Stocks with 4 letters in their symbols, the NASDAQ, beat up, okay? This stock was above 80 before. Not saying it's going back to 80, but if they come in and they report banner numbers, especially since we're under lockdown, my kid hasn't stopped playing Roblox. When she has her hour of iPad time during the day, guess what she's playing? Roblox. It's actually pretty cool. I watch her sometime. So that's why I like the stock. Also, 25% roll. So I entered into 1,000 shares. If it went down 10%, I'm ready to purchase another 1,000 shares. If it goes up and then down, I'm ready to purchase another 1,000 shares. You have to have the full allotments of 25%, 25%, 25%, 25%, 100% to invest in a single position. All right. If you don't, you get caught. And if the stock goes down or the option goes down, you can't average down. You can't be a successful trader. So then you're just counting how big should my losses be. Then you get greedy and try to recoup everything. And instead of doing that, you lose everything. So it's just really hard, and it plays tricks on your mind. And if you're struggling and thinking like, am I the only person losing money? You're not. There's a way to do things. It's the right way to do things. Real quick, if you remember in March, we had like 10 out of 12 red days, right? And everybody would tweet me every day. I'm following your rules. I'm getting crushed. I'm following your rules. I'm getting crushed. And I'm like, dude, every day is red. Every day is worse than the next day. Wait for some green days. As soon as we saw the green days, everybody was like, your rules work. Look at my portfolio. Your rules work. Your rules work. Now, we aren't still bullish, right? Because then we hit 8 or 9 red days now. Now, what I told you every day, dating back since last Friday, I said, Monday's probably going to be worse. Tuesday's probably going to be worse. Now, I did something stupid. I entered plug on Monday. I really should have waited. I said over the weekend I was going to wait till Monday or Tuesday. I was going to secure the best price. And you know what? I didn't. I had FOMO. I jumped in too soon. So instead of waiting till Monday or Tuesday, if Monday went down, I would have waited to Tuesday. When Tuesday went down, I would have waited till Wednesday. Wednesday went down. I might have jumped in at the end of Wednesday, and I might have suffered through a 7% today. But 7% today would have been much better than suffering 22 or 23%, which is what my stock was down, which is why I came up with a light bulb idea tonight, how to save your portfolios. I care about you. You guys know I care about you. Okay. So if this works out, which I think it was because the timing's perfect, as the NASDAQ's turning the corner, we're picking the perfect time to rotate our portfolio, to increase our portfolio by not spending more money. What basic premise is, and I'm going to suggest and give you examples with each of your stocks are, say you have 100 shares of plug, for instance. Say you got in even higher than me at $27. And the stock, let's just say it's even lower than it is. Let's say it's $22. So $27 to $22, you're losing $500. I'm going to say tomorrow, as soon as plug spikes at some point, you sell your 100 shares, all right? So you're still down. Let's just say you're still down $500, even though you'd be down less. Then I'm going to suggest you wait for the dip, plan ahead, and buy June or July options. And again, I'm going to figure it out for you here. So I'm going to give you examples so that it'll help you actually look at your stock and go, okay, if I'm going to follow that strategy, what's going to happen? So the point is about the strategy, you're giving yourself options that are 3 months out. So even if we're sort of wrong about the NASDAQ and it tricks us and it goes a little more down, maybe it struggles tomorrow, maybe it struggles Monday, we are bottoming. It will turn around. My investor friends in New York, my banker friends, told me they're investing in the NASDAQ stocks next week. Okay, so I know there's going to be strength. I saw it today with Citron, it turns out. I saw it a couple other stocks and a couple other trackers. You guys know I love my trackers, right? I see little pops. I know institutions are buying. I see it at the end of the day. They've been buying in the beginning of the day. the end of the day, I mentioned this during my live stream, they don't give a shit what happens during the middle of the day. These institutions generally hold for 60 days. So when the buying is strong, like JMIA, right? And again, I have no position in that one. I might take a position tomorrow because I've seen them do that. Okay, so anyway, I was talking about averaging down. I'm going to give you examples. It's better to just give examples. So thank you for staying with me. Thank you for watching. This is going to be the best episode. And when it is the best episode, here's what I'm going to ask. Pay it forward. Share this broadcast. Be like, you know, when things went off in my head, you know, when my portfolio changed, I was down 40% in this, you know, whatever stock it was. Matt suggested this option. I took $2,200 off the side. I put in $800 back, so I had $1,500 on the side, and I had two options. What happened? The stock jumped back 10%, and from being 40% down, I'm now up 18% or 30%. So that's the end goal, to take your 20%, 40%, whatever your stock's down, to flip the switch. All right? Let's say you'll still be right about the stock and the direction of the stock. You're going to give yourself a few more months, which is more safe, okay? We're not doing risky stuff. I'm not saying your stock's got to turn around by May 21st. If I was saying that, that would be risky. What happens if the market stays flat to the 21st? You'd be in trouble. Now, let's get to these stocks. Any of my recommendations good? Yes, tune in tomorrow. Watch. Why? Because I tweeted about, I'm just going to speak about it, Party City. I was in Party City at $7. Then it went down. I bought up more at $6 and change. Then it went down to $5.50. And I tweeted with such excitement, I'm tripling my position. I'm quadrupling my position. I'm buying 8 more positions of Party City at $5.50. Why? Because I said the downside was $5. And I said I would accept a 10% downside. If I bought in too soon, it would be a 10% downside. But what happened instead? We went from $5.50 to $8 today. That's $2.50 gain. That's 41%. So since I went crazy over it 2 weeks ago, that's why I mentioned I don't go crazy over it, because I don't have like 10,000 shares. I have my average shares, the same as every stock. The point is, when I point out the demand to Party City and you see it decline, like yesterday, it dropped pre-market. It was like $6.88. We picked up $1.20 since then, right? That's 20% since the pre-market decline. And I know you guys wake up at 4 a.m. Why? Because you're DMing me on the side at 4 a.m. Hey, did you see this? I think there's going to be movement here today. So again, if you're up, take advantage of it. Now, after hours, SQ, Square, if you look at after hours, before earnings, because earnings get announced at like 4:30 or 5 o'clock, right? So what happened after hours? They tried to manipulate the stock. They sunk it all the way down to like $216. Somebody bought it up, and they bought it all the way up to $231. Now, what's it going to do? It's going to settle in between someplace. But I'm just trying to share. Roku was a problem because of Netflix missed their quarter. So Roku suffered, and Roku, I just mentioned, lost about 25% in, I think, the last week. So thank goodness for all of you that stayed in Roku. I got out at $330. It's $309 after hours. It was as low as $282 today. So I was showing you guys $282, maybe $278. The point is, it lost almost $100 per share in like 5 trading days. So you think your stocks are bad. So these are all examples. D-Dog as well. I mean, unfortunately, I wish I had this lesson yesterday, because if you were talking about Roku and you guys are like, I'm beaten up. So the idea is you sell your shares and you buy the option. So for example, if you did that to Roku today and sold your shares at a loss at $282 and you entered into, let's say, June options or July options, because it's more expensive because it's a higher price stock, right there, everything that you're down, let's say you were down 10%, you would have made back in more. You'd be up like 30 or 40% right now, just after hours. I mean, as soon as it opens tomorrow. So that's kind of the idea. But yes, you have money on the side. Pay attention tomorrow. I'm going to be talking about all my positions, even some stocks on my watch list, which are really strong. I just mentioned Canadian Solar looks strong. It's not on my spreadsheet. I don't own any position. I mentioned Root looks strong, okay? And Root looks extremely strong. It was so beaten up, it has definitely bottomed. So if you're looking for a new position and this is the first time you're watching me, congratulations. Invest in Root. I like it. It's on my spreadsheet. I'm transparent. That's how I trade, okay? I'm not telling you to jump in at the market price. I'm telling you to plan ahead. So I don't know where it is. Let's say it's at $10.50. I would say try and buy it at $10.10. Look for a decline of 4% at some time tomorrow. We'll look for that morning. All right, Tiger, you have $19 average, 30 shares. Okay, I can't help you with your calls right now because we're not talking about the options right now. Okay, but I'll help you with your calls anyway. Here's what I would do for your calls. The next time Tiger spikes. Now remember, on market sell-off days, Tiger goes down 8 or 10%. On green days for Tiger, it tends to go up 8, 10, 12%. So when you see the spike, and I'll give you a specific example because I said I would. So tonight's all about you guys. And I thank you guys for being here. I'm just going to look up Tiger real quick so I can give you actual numbers where it is. Okay, it's 17:34 after hours, 17:14 at close. So you're $2 off. All right. So technically, you could sell your 300 shares, all right, of $17 stocks. You have about $540. And then I would say you look at the options. You go out a few months. Let's go out to June, all right? So you have $540. The $17.50 June calls are $2.20. So I would say you take that $550 and you buy 2 of those calls. That's averaging down, basically. You're getting rid of your shares, which you're down $60 on, okay? That's the point. You're down $60 on your shares. You're going to buy 2 of these calls for June, okay? When the stock bounces up $1, you're going to make back your $60 and then some. So this isn't a worst-case scenario. You're not getting killed, Chad. Now, what I would do for your 6 calls with a 521 strike, average $1.59, okay? Next time it spikes again, look for it to go up like 12%, whatever date it is. If it's tomorrow, if it's Monday, plan ahead, sell your calls for whatever you think you can get. So you take 12% of the stock. So the stock would go up about $2, let's say. You look at the delta for the $20 options. So let me help you out. This is a math lesson as well. So I look at the $20 options, and the delta is 0.68. So you're saying the stock's going to go up $2. You multiply it by 0.68. Let's say it's 0.7. So you round it up. That's $1.40. So you look at where your price is right now, and it's 65 cents, and you add $1.40 to it. So I would be looking actually to sell those $20 strikes probably at $2. So I'd probably get you 20%. That's where I'd set my sell. So I'm anticipating a spike. I'm going to sell those for $2 each, and then I'm going to wait for the dip. Now, it might not happen that day. It might happen the next day when it's the morning dip. You might have to wait for the lunchtime dip. The point is, if you sell those option contracts for $2 a piece and you buy back, right, for $1.60 again, which is what your average is now, you're going to save 40 cents, which is an extra 20%. So not only if you sell them at $2, you're going to make 20%, but you're going to buy them back cheaper, you're going to make 20%. So you're like, yeah, I only made 20%. Actually, you didn't. You increased your portfolio 40%. So what are we going to do with those strikes? Instead of buying back, if you don't want to, say you sell them for $2. The other option is you look at the June ones, and when it dips, you buy the June ones, and you try and get them for the same price. So all you're doing is buying yourself an extra month. So your situation isn't the worst. Some people are down 20 to 40% over the past 5 days alone. I mean, we look at Roku, we look at Uber. There were some stocks that just got beat up. If you're in Fastly, I'm sorry. They're a former client of mine. They were way overvalued. That whole TikTok Oracle thing, they're up to $125. The stock's $40 now. That's what they're worth. They're probably actually worth like $32. Peloton came out with great earnings. They spiked after. This is why I'm excited about the market. Peloton came out. Square came out. Roku came out with earnings. Cloudflare, I think, came out. DDOG came out. These are all NASDAQ stocks. So they're all coming out with earnings and revenue that are beating. It's hard to ignore. So the NASDAQ turned the corner today. That's why I'm bullish tomorrow. I saw the buying at 4 o'clock. So we kind of got your thing, okay? I would sell your shares. So everybody, it's the same principle. You're taking your stock that's down. You're selling your shares. Okay, so Dwayne, here's what I would do for you. You're down 30%. I know. EBON is just so shorted. They're beating up on it. And as they keep winning every day, and they crushed it today. The market crushed it. It went down 50 cents. When Doge sells off, they're going to sell it even harder. I don't know what to do. Unfortunately, I've got big bags of EBON, and I didn't average down. So I mentioned somebody else told me their average was $5.60. So every time EBON spikes, they sell it. And later on that day, they buy it back. So this morning, they would have sold it, and they would have bought it back 50 cents cheaper. So it takes their average down today would have been 50 cents. All right, and they've been doing that for 3 straight weeks. It takes a lot of time, but they got their average down from $5.80 or $6.10 all the way to $3.80. So that's significant. It's like $1.80 or $1.90. To get that down, trading the same position, that's how you increase your portfolio with a piece of crap stock. I like the stock. People don't. But institutions were buying it at $6.10. I thought there could be a spike the other day, and the markets turned bloody. So it's only patience for this one. I haven't gone super in. You guys know some stocks I've gone super in on the past before. I bought like 200,000 shares. I haven't done this for this one. And I'm thinking one of these days I want to because I think it'll spike. But every day it goes down like 5%. It baffles me. So this one, that's how it averaged down. Unfortunately, I wouldn't put you in a risky play. I wouldn't tell you to sell your shares at $3.30 because it's so beat up. You'd have 4,800 and then tell you to go into options. And if they do play around with the stock and they chase it down to $3 or something, I don't think they can. But I didn't think it would go under 4, but then we went bloody. The point is, I'm not going to suggest you go into options and sell your stock there. You're down 30%. I would try and scalp it, meaning if it spikes 40 cents, if it spikes 20 cents, sell. Anticipate that it's going to drop down to where it was before it spiked 20 cents. Do it 5 times, you pick up $1. Your average becomes $3.78. You can only do so much. Again, and if you don't want to sell all your 1,500 shares because you're nervous it's going to be a short squeeze or something to that extent, then I understand it. But sell 1,000 shares, pick up 20 cents. That's $200. Keep doing it, all right? And do it for other stocks too. If you see the market's going to capitulate or throw up on itself, which we know when it does it for the morning dip. So if you see a spike in the morning, unless it's one of those green days where it's strong the entire day, please sell. And Tiger upsets me because so many of you, half of you, trade Tiger in and out, TIGR. And you sold the options at 5 and you bought them at $3. You sold them at $5. You bought them at $3. You sold them at $4.50. So you've made so much money on the side. Then some of you text me on the side. They're like, dude, I'm in Tiger. It's now $2.20 an option. I know it was as high as $5. I should have sold. And that's the whole thing. It's always take profit. Now, even though I think the NASDAQ will be strong coming up for the next few days or even next few weeks. I mean, let's start off with the next few days, okay? It's still going to be iffy. You're going to get a spike. Sell, take profit, wait for the dip. There's not going to be a day where it's just power. You're not missing out, okay? I always have that fear of missing out. Like if I sell, it's going to spike. That's how unlucky I am. But you know what? I thought about selling E-bond like literally 20 times in the past 3 weeks and then buying back on a cheaper dip. And I never did it. I never pulled the string. So that's my fault. And again, it's tough. It's very hard. If you think you're alone making these decisions, when you're making the right decision, you're going to feel warm and fuzzy inside because you're going to know that your price point is so good. So some of you have got that. All right, let's go on to the next question, please. Stock. Okay, I have 10 trick. It's unfortunately, it's not a question about options tonight. It's how to change your stock position into an option position. But say you had shares of TRIT and you want to exchange them. I wouldn't say you do that for this one, because that stock has surprised me. So what am I saying for you? Okay, here's what you're going to do. Ready? You're going to take your contracts. The next time it spikes, let's say it spikes. I'm going to look it up specifically for you since you're here. And I've talked about this stock before, and I know it's in the $6 range, which is crazy because I thought $6.88, what I paid for it, was like the best thing. $6.23, after hours $6.37, which kind of makes more sense. I'm probably going to say the $6.37 price range, $6.23. Okay, it's all the same. So what are you going to do when it spikes? And let's tell you what the spike is going to be. The one-day spike, it's going to go back to $7. I would probably average down, to be honest with you. You're down 52%. So I teach lessons about averaging down. Now, how would I average down with TRIT? Since your $7.50 contracts are out of the money, I would look at $5 contracts. So you have 10 contracts. I'm going to tell you what you paid for them right now because I know, because you basically told me. They're 50. You paid about 30 cents or maybe 35 cents, okay? So you're down 17 cents times 10. You're down $170, okay? So the object is to make you $170 back in TRIT. So, oh no, sorry, you have June. Sorry, so you're down $300, okay? So you make you $300. So I'm going to suggest, yeah, the spreads are so crazy in this stock. $2. You know what? I'm going to suggest you average down. I'm going to suggest you put in a cheap bid. I would probably put in a bid of, 25 cents tomorrow morning at open or even, 25 cents. If it spikes down, I would buy 2 positions. So if you have 10 contracts, I would actually buy 20 contracts at 25 cents. I would put in $500. Okay. I expect TRIT to pop within the next few days, easily above 7. So we're 623. Above 7 is like a guarantee. I used to say above $10, right? Because that's what it's worth. I mean, that stock is so beaten up. And since it was the victim of a short play, it's never rebounded. Every time it starts to have legs and starts to have momentum, something happens. Like Bitcoin sinks, crypto sink one time. That happens. There was a short squeeze, short seller. Sometime it gets related to other stocks like Mara, and so it went down. Volume was so light. It used to be 3 million, then it was 1 million. Today it was like 700,000. So when it gets pushed down so hard, it's not because people are selling. It's because people are just, I can't stand it anymore. The market's going down. I want to get out. So I mentioned this on Monday, Tuesday, Wednesday, today's Thursday. If you think the NASDAQ was going down, you get out of your 4-letter stocks. Even though I touted them and I liked them and I liked AI and I liked this and I liked that, I left those positions on the board. But personally, I got out of stuff on Monday and Tuesday. Not a lot of positions because I mentioned this before. 71.4% of my money, I have a whole spreadsheet. My money is on the side, which is a lot of money. It's just I don't know what to invest in. I bought a lot of positions on my spreadsheet today. I'm waiting personally. I'm probably just going to enter 1 or 2 because I'm not going to hold on to anything long term. If I go into tech, it's because I think I have a good run coming in whatever stock it is. Now, if you want a quick tracker, follow Netflix. I don't know where it is, but if it breaks 500, that is a supreme positive side for tech. I'm actually going to look up Netflix as one of my own stocks here. I don't own it. And Netflix. Here we go. Okay, $4.99. So it's right around there. It was $4.95. The point is, when Netflix breaks 500, that's just a key figure. People look at that. It was like when Tesla used to try and break 800, and they use that as a marker. So that's it. Let's go to the next. Okay, QS. Okay, great timing for you. Congratulations for you. Why? Because QS is almost at that $30 range where it was when I was saying, okay, maybe the worst is over for this. That seems to be a bottom, a floor for QS. And I only know that because I shorted the stock and I shorted it and I sold it at 35, my short position. And I said it would go down to $30 and it went down to $30 and change. So that's where it is. It actually went $29.83 today, but bounced all the way back to 31. So you're $10 down. So you're $1,000 down. Okay. You're $1,000 down. Sell your stock when it spikes tomorrow. Okay. It's going to spike. It's at $31. Let's see where it is after hours. It's at $31. So I would sell my stock at $31.80, maybe even $32 tomorrow. Yeah, you'll probably get $32 tomorrow. So if you sell it at $32 tomorrow, you're down $9 times 100 shares. You're down $900. Okay. So you get your money on the side. You sell at 32. So you have $3,200 to play with. You're down $900. So we want to make you at least $900. So here's what we do. We go to the options for QS because, QS does energy, designs batteries, right? We think it's pretty low right now. So we're going to go out, and I'm going to suggest you go out to June 18th. 43 trading days out. That's enough time for the stock to rebound. When it rebounds, it might even go back to your $41 where you would be breaking even. You'd be like, yeah, I'm breaking even. Great. I'm going to pretend that it goes to $37 because I think that's a fair assessment. All right, so it's $30 now. We're going out 43 days, and we're assuming the market's going to turn around for Neo, for Blink, for Plug, for all these companies. So $41, we're going to make you $900 at least. So I'm going out to June. Anybody can do this with me? June 18th, okay, because there are a lot of options in June. June 18th, I'm going in the money to the $30 calls. All right, and the price of the call is $4.82. Okay, so you're going to put in a bid tomorrow. Hopefully it's going to decline, right? So $4.82. You're going to put in a bid probably at $4.55. Okay, if the stock goes up to $37.45, let's just say because it's easy to do the math. All right, you're putting in a stock $4 and let's say $4.50. $4.50 you put in the bid, and the stock's going to go to $37.50. Okay, so it's going to be worth $7.50. You're putting in $4.50, so you're going to make $300 per contract. So let's say you want to make $1,200. You're going to lose $9. You want to make $12. Sell your stock tomorrow when it spikes and buy 4 contracts expiring June 18th, $30 contracts, and you're going to pay $4.50. Okay. So right now the stock is beat up. We're playing it. It's gonna rebound. You're giving yourself till June 18th, and if the stock is $37 and change or higher, you're gonna be up at least $300. So you're saving money on the side. Plus, when you do this, so you're going to buy 4 contracts at $450. That's $1,800. If you sell your stock for $3,100 or $3,200, and you're only using $1,800, now you have $1,400 on the side. You have your QS position. You have it till June 18th when your options expire, and your goal, whether you have stock or options, is that it goes back to 41. Now, guess what? It doesn't even have to go back to 41. If it goes to 37.50, instead of being down 10%. Right? Instead of being down 10%, you're going to be up. You're going to be up $300. You're going to be up 10%. So that's what it is. I'm trying to teach you how to trade in your position. Again, it's stock only. If you're in options, it sucks. It's hard to average down. You have to average down the right way. And I explained, when you average down in options, Give yourself more time. And I only recently discovered, I always like risk. I always like instant gratification. All right? Knowing you're right as soon as possible. Getting the money, seeing the money, touching the money, okay? Instant gratification. Saving the casino. Yeah. Anyway, so that's what I like. That's why I go risky. But since I've been picking options because the market's been so tough, especially tech stocks, I've been going out a couple of months, and it's so easy. The stock goes down, my option goes down 10%. I'm like, okay, I know where my stock price is going to be. So let's just real quick. I think NEO is going to be $50. This is the option example I give in my option video. I simplified options. I made like a 10-minute video. We're going to release it later on YouTube later in the week. My example is NEO. You guys should pay attention because it's going to gain 100 to 300%. It's a simple position. You're giving yourself a plenty of time. All right, 300 shares of STPK. Oh, that's that SPAC, isn't it, right? STPK, it was $32. Somebody came out and said it should be worth more. It went to $36. I'm scared to look. All right, I'm going to guess right now. STPK, it's at $23. Let's see it. Maybe even less. It's a SPAC. And I hope that's the right stock, because if I'm insulting the stock, STPK, that's not it. STPK is not the symbol, because that's not a real symbol. I think you're talking about Star Point or something, right? Star Peak. Where is it? Star Peak, right? No. Oops, excuse my language. Okay, I don't know what that is. Can somebody share? I think he's talking about the SPAC, Star Peak, Star something. It was like $31, then it went to 28, then it went to 36, and I don't know where it is. I figure it's probably going to be around the 30, 23 range, maybe 22. If someone could figure it out, and we can look at that. Okay, let's go on to the next stock. And I'm sorry, I can't help you with that one, but I think that's maybe it's SPT. Let's see if that's it. SPTK. Nope, that's not it either. STPK became STEM. Okay, so it probably was the same stock. Thank you. That's great. All right, let's see what. Jesus Christ, where's the STEM? All right, STEM Inc. Sorry. Okay, $21. So my guess is pretty close. When I tell you guys to make predictions about a stock, basically all I did is say I knew it was as high as $30. I thought I had trouble at $35. If the market sold off 40%, the stock's going to be around $22. That was my guess. It's a SPAC, so it's actually 5% lower. It's $21. But know in your mind, always make a guess. If you see the market's up 150 points or down 150 points, guess where your stock will be, and then look at it. And you'll see, you know what, the stock's lower than what I thought it would be. Maybe it's not so good. So anyway, this SPAC, let me just look at the stock. Volume's been decent for the past 5 days, and it's been selling. Even today, it sold off another 7%. I would be extremely cautious. So usually, I tell you, sell your 300 shares. You're in at 38. Oh, geez, Amy, I'm sorry. Honestly, I don't know what to do on this one, and that's just me being transparent with you. I generally would say, okay, if you think, okay, so here's the premise. The premise is you believe in this stock. So I'm not going to say that I don't believe in the stock. So STEM, here's what's going on. You think it's going back to, let's say, $28, okay? Is that fair? You bought it at 38. I'm going to assume for this reference, you're already down 50% just from stock alone. But let's assume you get a bump to $28, okay? That's fair. It's like $7 from where we are, which would be like 30%. It's beating up even more than that. So you'll go to options, and we'll go out because you want to give yourself more time. We're going to go out to July for you. Actually, yeah, we'll go out to July because I don't know when this stock might turn around, and I'd rather be safer. So I'm looking at the July $20 options, and they look to be trading in the $3 to $3.50 range. So you're going to sell your 300 shares at now $20. You're going to get $6,000. All right, and then you take your $6,000 and you're going to buy. Let's see how much you make. So you need to make a lot of money. You're down $19 times 300 shares. You're down $5,700. So you're basically down 50%. You want to make $6,000. We're going to make you something that makes 100%. Okay, so we're actually going to take STEM, and we're going to look at the options, and we're going to go out even longer. We're going to go out to September. Why September? Because you're talking about $6,000 that you're investing in. The last thing I want to do is put you or suggest that you take an options play and the stock gets beaten up. I want to give your options play more than enough time before expiration. So September, I believe that gives you like 5 months, 4 months, 134 trading days. 100. Okay, so If you're wrong about the stock, if STPK goes down even more, I can't help you. We're just in a bad position. You lost 50%. Your other option is to pull it off the board and just to suck up the 50%. But let's say you think the stock's going back to $27. Again, everybody's premise is you're invested in a stock for some real reason, and your stock's just been beat up because the Nasdaq's been beat up, and it's going to go higher. So here's what you're doing. You're going and you're looking at the, let's do the $17.50 strike. $17.50 strike. Again, we're going out to September 17th, and you're going to pay, it looks like, $5.50 per contract. I'm going to suggest you buy 5 contracts. You're going to spend a little under $3,000, about $2,750. You're going to buy 5 contracts. Okay, it's $5.50. All right, and it's $17.50 contracts. Let's assume the stock goes to $26.50. It's $21. So let's get that $5.50 back. So you're not even killing it. Just 26.5. You're buying a strike price of 17.5. That makes each option contract worth $9. Okay. I said you're going to buy 5 of them. Is that correct? Maybe you need to buy 6 of them. 6 times 9, 5,400. Yes, that would make you 5,400. So I would suggest you buy 6 contracts at $5.50. They expire in, again, September, $17.50. So I'm being safe for you because I'm getting you in the money, and I'm getting you a far out expiration. So you're down $5,700. I'm trying to make you back $5,400. Now, if the stock does go to $27.50, right? You're not at $38. So regularly you'd still be down 40%. Instead, you're going to be break even. Now, let's say the stock goes to $30, right? And you have 6 contracts. Now you're going to be plus $7,200. You were down $5,700. So you're going from down $5,700 to plus $72. You're making $1,500. From a shitty position. You're stuck in poop right now. You're down $5,700, and I'm trying to make that money back for you. So again, my assumption is that the stock will correct itself, but not back to $38. That if it corrects itself back to $27.50, and you buy the $17.50 calls in September, you're less risk adverse because it's September options. You have a lot of time in between, and the stock can move. Let's say they announce some kind of good news, and it goes 27 tomorrow. Guess what? You made your money back. You have all the time on the side, and you have extra money. When I'm telling you to buy these options, it's going to cost you like $3,000. You have $6,000. So you're still going to have $3,000 on the side. Say these options go down. Let's say the stock goes down 10% tomorrow. What do you do? Well, first of all, that's going to be a great entry. So plan ahead, Amy. All right, let's go on to the next one. Oh, sorry, Tony. 100 shares of you. Your average is 109. So I like this. These are good stocks. I don't know what the stock is, but $109 stock, or obviously less than that, tells you. Now, Unity software. Okay, tech, it's been killed. Can you see that? See that last bar? Heavy volume outflow. I would actually suggest that maybe you don't average down on this one. This one looks like it might be able to drop more. Even if the Nasdaq changes course, there was some heavy selling today in that one. So again, okay, here's the assumption. The assumption is your stock's going to go back up. All right. So, and you're only entering, I might tell you to enter a different way on this one. It'll be a little lighter. So the stock chart looks terrible. So on this one, literally, I'd probably just take the loss. You have 100 shares. It's 109. You're down $20. You're down $2,000. I would probably try and make up the $2,000 a different way. I don't want to put you into options for this because if I put you into even a September option for this one and the stock goes down to $78 in the next 3 days because the chart just looks terrible, I would hate for you to be down 40% when you're trying to make back the 40% that the 20% that you're down. So you're down 20%. It's talking about compounding your problems. So some of you say, I'm the worst at that. I sell at the wrong times. I buy at the wrong times. After I sell, it goes up. After I buy, it goes down. You don't want to compound problems. When you have an issue, it's best sometimes just to call it and say, I made a mistake. I'm moving on. When you compound it, it's like saying you're stuck in shit and you're just throwing more shit at it. All right. And all you're doing is wasting money. This is hard-earned money. So I feel terrible when my positions or my plays don't go well. But I gave out a bunch of plays and NUE is just off the chart. So if that one goes to 100 for me, I'm sorry for interjecting. I'm going to be stoked. I'm going to make like 500, 600, 700%. Please pay it forward. I have a platform. I charge $349 a week. I'm trying to help. The reason I'm giving you this advice right now is because I really love my family. I love helping you guys. I want you all to succeed. I want to disrupt the institutions. That's why I'm here. I want to make you all smarter, better traders. I used to have a bunch of things that I would say. I'm here for one reason. I want to make you a better trader. I want to make you better at trading. I want to make you smarter. I want to make you profitable, of course. But I don't want you to get killed. I don't want you to do the wrong thing. I don't want you to buy the ask. I don't want you to scare sell. I want you to understand the market because you're playing with your money. Okay, I'm having a real sip. BLDP, you have 50 shares, $36. You're down 1,000. And yes, this is a play you took before you met me. I don't. It could be my play too. You guys won't insult me if you're like, yo, I was in this stock that you gave and it's poop because we've had a terrible market. Okay, Ballard Power. I'm assuming that's probably some type of green energy play. This stock, actually, there was buying today. Even though it went down 2.82%, I'm going to assume without looking at it just today that it was down probably 6.8% at the worst. So I won't be able to figure that out because I'm not that smart, but it was down to 14.52. So it was down another 60 cents, which is another 4%. Okay, 6.82. That's what it was down. I said 6.82. So sometimes I just make these guesses and they're so damn accurate, but that's not the point. Let me look at the 1 month chart real quick. Okay, it does look like a turnaround and it looked like it bounced. Let me look at the 3 month chart. Again, it's an energy play. I happen to like energy plays. I think the Biden initiative's going to get passed at some point. I don't know what happened. He got into office in January. He said he was passing this initiative for $2 trillion. And we're going to do green energy and build bridges and build everything we're going to do, railroads and vaccine. Nothing's happened. There's no bill. There's no vote. There's no nothing. I mean, it just drives me crazy. Okay, so let's talk about what we're going to do. So you're going to sell your stock on the spike. All right, so what do we got looking for you to spike to tomorrow? I'm going to tell you right now. If it spikes, I mean, you could be careful. This thing could take off. But I would be looking for $15.50, let's say. So you have 50 shares. Let's just say I would look to get the best out of it tomorrow when it spikes. So $15. I'm just going to say $15 for right now. So $15 would be $750. You're in at 36. So you're off $20. Okay, so you're off $1,000. You have $750 to play with, and you're off $1,000. So you need to make a return of over 100%. So we're going to be a little more risky with you, and we're going to go options, and we're going to go for a sooner expiration date. We're going to go to the June because you need a better return. You need over 100%, and I like the chart. And if there is a turnaround, if it's bad, it's going to get a little worse. It's going to go down 10%, but you still might get that turnaround. But I actually expect green energy, and I gave Canadian solar out. If you missed my earlier, part of this broadcast, I actually like green energy right now. I didn't like it. I didn't like Canadian solar at 46. I like it at 39. I like it at $40. Again, I saved 15%. I saved 15%. So although it's not a 15% profit, if I was still in the stock and riding the elevator down before it goes back up, why should I give away 15%? This is what I tell you guys. Don't give away 2%. Don't give away 5%. Make all the percent you can. Okay, so you need to make $1,000 and you only have $750. Sorry for getting sidetracked. I'm going to June. I'm buying you the $15 calls, and they are $1.40, let's say. Okay, the bid's $1.35. So let's just say $1.40. $1.40 is $140. You have enough for 5 contracts is $700. So you buy 5 contracts. They are $1.40. That's $700. You have $750. So you sell your stock. You buy the 5 contracts. June, $15 calls. Okay. So for you to make back that $1,000, you need to get $2,000 out of it. So you need your calls to be worth $4 a piece. $4, right? Times 5 contracts is $2,000, and you're down 1,000 plus 750. So that would actually be great. You could actually sell it for under $4. So what do you need the stock to do? Go back to $19. So you're in at $36, right? You're getting crushed. I give you this options position. Sell your stock by June 18th. You need the stock to be at $19. Do you think it's possible? Yes, because your stock's been so beaten up. It looks like it's turning the corner. Your June options give you how many days? 43 trading days. 43 trading days, and your stock only needs to go up like $3.50, which is basically 22%. And if you look at your stock, it probably went down 3%. It was down 6%. It probably lost 8% yesterday or 10% the day before. It's not ridiculous to think that your stock is going to go up 22% by June 18th. So if we do that, you're going to take this play. You're down $1,000 on it. You're over 50% down, and I'm trying to get you above even. So this play, this terrible play that's been paining you like paper cuts, right? Paper cuts. Every day you look at it, you're down more money on this one stupid position. I'm going to tell you how to turn around this one stupid position from May 6th being down $1,000 to June 18th, probably before that. As soon as Ballard, I'm going to add it to my watch list. As soon as I see it hit 19, I know instead of being down $1,000, you're now up at least $250. And if it hits it before June 18th, I know you have the intrinsic, the time value added to the options price. You're actually going to make more money. All right, let's go on to the next one because I want to get to everybody. Okay, 20 shares of coin. What is that, Coinbase? Okay, so let's see. I'm assuming those options for coin are going to be expensive because I know a lot of people. Oh, $375. Oh my God, I thought you were in at $275. I was going to tell you had a great entry price. $375. Okay, Coinbase is at $250. So you're $125 down. Let's say $120 down times 20 shares is $2,400 down. Okay, the good news is you have $5,100. So you're down basically 33%. All right. You have 50 something hundred, 5,200, let's say 5,300, but you're down. I'm sorry, you're down. That sucks with 2,400. So we're going to pick options for you again, and we're going to go out, and we're going to give you a lot of time because we want at least one earnings period for you. Why? Because Coinbase is going to crush it. All these exchanges with their transactional fees are going to crush it. Cryptos are off the chart. So I love these. That one, that's why I don't understand some of these stocks, but I won't go into it. So we're going September. We got to go find the stock. All right, so we're going to go September, and you have what on the side? You have 20 shares left, and it's 200. You have $5,000. So we got to find an option that costs you. Okay, so we're going out to September. You're looking at the 285 calls. Okay, $285 is your strike price. September is your expiration, so we're giving you at least 4 months, okay? And you're going to buy 2 contracts. And you're going to pay somewhere in the $24 or $25 range. So you're going to spend $5,000. You're going to sell your shares tomorrow. Hopefully you sell at the peak. Then you're going to wait for the dip. When you sell your shares at whatever peak, you don't want to enter in. You don't want to pay too much for the option. You want to wait for the lunchtime dip. You want to wait for the afternoon dip. And if it doesn't come tomorrow, say you sell it at a peak and it keeps going up, wait for the dip. You don't want to pay too much. This strategy is about selling at a peak and buying at a dip. And if you don't think it's coming, I'm telling you it's coming. It's coming every day. So for these, again, coin, September 17th, 2021, strike price, $285. You buy 2 contracts for $2,500 each. You're putting in $5,000. Okay, so right now you're down $2,400. So what do we need to happen? You're down $2,400. You have 2 contracts. You need to make $12 per contract. So you need to be at least $37. $37 is $92. So you need Coinbase to be at least $322 by September. Good news for you. It's probably going to be higher than $320. So the whole point is instead of needing $375, the stock to go back to 375 to gain 33%. You don't need that. The stock's at 256. You need it to gain 70 points. You need to gain about 23%, okay? 23%, and you're making all of your money back. It's not going back to 375. And if it does by September, guess what? Your options are going to be crushing it. If this happens to rebound to 375 by September and you're buying the 285, each contract will be worth $9,000. So if it goes back to your original price, you're going to have $18,000 in profit, and you're only down $5,400. So if this goes back to your original price by September, and you buy the option contract and sell your stock, you're going to make $18,000. You're losing $5,000. You're going to make $13,000 difference. So instead of waiting with the stock and hoping it goes back up, and if it ever does, you break even. Instead, I'm telling you, the stock only needs to go up 23% by September to $322 for you to be green again. So how great is that? Your stock's down $125 and you only need it to go up $70. And it's been beaten up. I mean, if I look at the chart, I don't even want to look at the chart because it's probably so disgusting. It lost $100 since it came. Let's go on to the next stock, please. And these questions are great. I'm hoping everybody gets this. Great plug. And I love this because I've been buying plug options, and I'll tell you from memory, September, $25 calls. I paid $4.25 on Tuesday. I paid $4.50 yesterday, and today I paid $3.20. I think it actually went under $3. So I would have suggested, I would have loved for you to have done this today, but you'll be okay. Tomorrow, on the biggest peak, you could sell your stock. So you're only down, let's see what Plug's at right now. I don't even know, $22, let's say. 22 and change maybe. Plug is at $22.50, and after hours it's 22. Okay, so $22.50. 22, so you're down $3.40, and you have 600 shares, so you're down a little over $2,040. Okay, so you're down $2,040. When you sell these shares tomorrow for, let's say, $23, you put in the sale price of $23. It's going to hit 23 at some point tomorrow, guaranteed. It'll probably go higher. But let's say you sell for $23, 600 shares, $23. You're getting over probably $13,000. Okay, you're only looking to make back $2,000. The great news for is, so we're gonna make you $4,000 because we're gonna make this a profitable position, and we're gonna keep some money on the side. So I'm gonna suggest you enter the same options as me. We're gonna go to Plug. You're gonna go to options. You're gonna go out till September 17th, same as I told the last person. I'm gonna suggest the $25 calls, because again, we say Plug's going to recover. So it's $3.50 right now. So we want to make you at least $2,000. So if you were to enter and you bought, let's say you bought 7 of these contracts. All right, 7 contracts at $3.50 is $2,450. So you're getting $13,000 from selling your stock. I'm asking you to spend 1/6 of that. All right, about 14% of that. All right, so you're going to buy 7 contracts. You're going to spend $2,450. You have 7 contracts, and you're looking to make back $2,400. So for you to make $2,400 back, you have 7 contracts. That means each one needs to go up by at least, it needs to double. So this needs to go to $7. So you're looking for Plug to be at $32 by September 18th. Now, the good news for you is I said on the low side, I expect Plug to be at least $35 by September 18th, which would imply that you get $1,000 per contract. So you're putting in $2,450, and you're going to get at least $1,000 per contract, and you're going to have 9 contracts. So you're making what was I said, 9,000, and you put in $2,450. You're making $6,000 back. Right now, you're down $2,000. I'm trying to make you $6,000 back and let you trade $11,000, free up money on the side, because you're only going to use $2,400. So again, I'm limiting the amount of money you have to invest. I'm giving you out an expiration until September. So I'm not saying it's risky, like the stock's got to move tomorrow. It's got to move next week. Oh my God, I'm so freaking out. No, it's got to move by September. So I think the reason I'm so sure about Plug is Biden's going to pass this green initiative stuff. The solar stocks are going to go off the chart. Jinko, First Solar, Canadian Solar. NEO is going to go off the chart. Tesla will gain some action. Blink, Charge Point's going to gain action. They're all going to gain momentum. All right? That's a whole industry that he's going to dedicate, $500 million to, or something ridiculous like that? And all the cities are undertaking these charging stations. I was at a parking lot today. Who did I see? Blink. All right? I don't know if their station worked. It looked nice, actually. I was kind of surprised. So anyway, you're down $2,400. I'm going to make you at least $6,500. So I'm going to make you $4,000 profit, and you're going to save $12,000 on the side. Let's go to the next stock. I want to get as many as possible. And again, you're in calls. You're down 41%. So if you're down, I don't know when your calls expire. Unfortunately, you didn't tell me when your calls expire. But let's say they expire May 21st. I won't say they expire May 7th. So let's say they expire May 21st. So you're one that's down 41%. What would I do? I'd average down. Well, my options are down 40 or more percent. I average down, and I take, if you have 1 contract, I would buy 2 contracts. All right? So you paid $3.50 for the first contract. That's $2.22 now. You buy 2 more at, let's say, $2.20, right? So you're $3.50, $2.20, $2.20. That's $4.40. You're $7.90 for 3 contracts, and that is $2.30? No, $2.63 each. No, that doesn't make sense. All right, let's screw that. Use my rules. 40% down on the contract, average down. Let's go on. We're not talking about options. EBON. Again, I mentioned this earlier. You're in for 600 shares. Every time it spikes 20 cents, sell your 600 shares and then wait for it to dip back. It'll go down again. It'll go down by 10 cents. So again, if you did that today, you could have saved 50 cents. I mentioned that earlier. You got to go back and watch it. Next question, please. Okay, TYME. I'm sorry. I can't mention that stock because it's $2.50. I can't tell you to go into options. I think this stock is like $1.20 now. What am I going to tell you? Throw away the rest of your money? No. At some point, we spoke about the stock at $1.50. I'm holding my position. Why? Because I think it's worth north of $3, $3.50. But I'm going to hold it. If I have to hold it a year, I will. It's just a beaten up industry. The whole biotech industry is beaten up. I've been talking about that for weeks. Every time somebody mentions, hey, what do you think about this stock? I'm like, hey, it's terrible. I wouldn't be in that industry. You look at TRVN, Trevenia was $3, and I was like, shh, it's poop again. All these stuff. Bingo went up to what? $12. Now what? It's like $5 and change or something. Someone said the other day it's up to $7. I'm pretty happy about it. I mean, even SRNE. Kramer talks about. Okay, so real quick, my position for NUE. I don't know if the Kramer jinx is going to happen, but I kind of want to sell my position for 300 or 50% profit because Kramer is a jinx. Let's go on to the next stock, and we're past an hour, so I'm going to do Tiger calls. I already spoke about Tiger calls and plug calls. So please, Matt, if you're paying attention, I'm not trying to ignore your question, but figure it out. If you're down 4,000 and you sell the stock, and I already mentioned the two positions, so go back and rewatch it. Rewatch it, pause it, go forward. Pause it, go forward. Figure out where you're down. You'll be like, I'm down 4,000. I'm down this much. So for plug, again, when you get the spike, sell it and then buy a month out. Okay, that's what we're doing for plug. Give yourself more time. For Tiger, you got to watch it. Again, Tiger moves quickly. So when it's going to be a down day, you just got to do it. Okay, I'm not going to answer TYME or Evon because I already did. D-Dog, you're 88. So unfortunately with D-Dog, you're a day late. All right. Imagine if you reached out to me yesterday. And here's the example with D-Dog. It's up like, what, 7% after hours? 6% after hours, down 7% today. So you know what we're talking about. If you sold your 250 shares of D-Dog, or no, 25 shares of D-Dog at 88, right? So you're 25, and you paid, let's say, you didn't tell me what you're down. So you have too many things right here. 250. All right, I guess you have 22 shares of Alibaba. Again, okay, so please, you understand how it is. D-Dog, I can't help you because it's up 6% after hours. If you were to buy options on D-Dog tomorrow morning, you're going to pay too much because it's already up. It's crazy. Oh, by the way, the currency, AMP, the crypto, it just went over 7 cents and now it went over 8 cents. This is the same one I spoke about at 5 cents. So it's up 60% since. NEO, you bought it at 38.92. It's now, this is perfect. It's now 36.67. You also have options bought $40 September, $5.88. Now, okay, so let's just talk about your options real quick. You're down $1.50 on your options, so you're down 25% on your options. So it's up to you, Matt, if you want to. I don't know how many options you have. Let's just say, for example, say you have one option, I would buy another option. Let's say you have 6 options, okay? I would probably buy 2 more. I'm not averaging down the right way, but you're not down 40%. You're only down 20 or 25%. So I would try and get a little dip tomorrow. Hopefully you can get it for like $4.30 or $4.25 or $4.20. Buy 2 more. I don't know how many you have. If you have 1, you buy 1 more. If you have 5, you buy maybe 2 more. Just, use your mind for that. But Neil, so you're down, let's say $2.30 on the stock. You could sell your stock tomorrow. I don't know how many shares you have, but you're only down $2. So let's say you had 100 shares. You're trying to make an extra $200. You don't really need to in your position. You're not getting crushed. You're only down $2, which is like less than 8%, I think, right? Yeah, 10% would be like close to $4. So you're not getting crushed on this one. For your options now, if you wanted to, you could add to your position. Again, that's me thinking NEO is safe. I think plug is safe. Again, for September, I'm not saying it's going to turn around this week, next week. I do know tech will rebound next week. I am confident. That's why I'm so sure this light bulb went off to me today. And I'm like, I'm going to help these people salvage their position. Let's go on to the next one. I can't tell you to go into options in Excel. Excel's a SPAC. Excel's beaten up. What I would tell you to do, okay, here we go. Here's the solution for you, right? You're down 60 shares and it's down 609, so you're down 48%. So let's say you're down 12, and you spend what, $660, $690. You spent $609. What are you down, about $400? I guess. No, $360. I guess. Let's say you're down $360. You're gonna make $360 back. You only have $360 to invest. I'm gonna send you over to Canadian Solar. I'm gonna say sell your shares. You have $600 to invest, and you need to make $600. So we're gonna go to Canadian Solar. We're gonna go to the options. We're going to go out to, let's go out to June 18th. All right. You need to make $600 and you have $600. I'm going to tell you to buy the $40 calls for June 18th. And I'm going to tell you to pay $3. All right. Buy 2 calls, June 18th, CSIQ. Again, June 18th. All right. So you're going to pay, what did I just say? $3, right? So you needed to double. So your $3, you needed to go to 46. So you basically need Canadian Solar to go back from $40 to $46, where it just was basically a week ago before I sold it, which is very likely. So for you to make your 600 back, instead of being paper cut by XL, which just sucks, and Kramer suggested at 18, and it was even higher than, it goes 18, 15, 14, 13. Now he said at $8, it sucks. And it does suck because there's no momentum in the market. The market's selling off, of course. So the stock could go up. The stock could bounce to 7. The stock could bounce to 8. But rather than do that, I'd rather have you in one of the better class, Canadian Solar, First Solar, this specific position, Canadian Solar, $40 June. So you have 43 days till it expires. You're going to pay $3. You might even try and steal it for less. You might put in a bid at like 280, 290 or something like that. So that's what I would do for that. And you're basically looking to go back to 46. If Canadian Solar goes to $46 and you get in tomorrow, right? $46, which is like a week ago. There's more likelihood of Canadian Solar going to $46, you making your $600 back, rather than, ready, XL going back to $12. Are you kidding me? XL's not going back to $12. That's just not happening. That's absolutely crazy. So thank you so much. So yeah, if you're still watching, pay this one forward. If you like this video and you're like, dude is off the, this makes sense to me. I get it. I'm salvaging my stock. I'm keeping money on the side. It doesn't matter if you have $12,000 or $200 or the dude that was just down $600. He put in 12, he has 6. Okay, CCIV, I know where that's at because I said it could go under $20, which it did. I think it probably went to like $19 today. So let's just look up that one because I'm going to give you an example real quick. CCIV. But pay it forward. Tell people they don't have to follow me on Twitter. They don't have to join my platform. I'm not looking for everybody. I'm looking to make you a better trader. I'm looking to make him. If your friends are talking about it, if your parents are talking about it, I don't care. If the teacher at your kid's school is talking about stocks, be like, yo, this dude does YouTube, blah, blah, blah. He has a platform. It's cheap. It's cheaper than a cup of coffee. All right, so you're down 37%. Yeah, so the stock's at $19, right where I said it could go back to $19. I actually said it could go back to $18. And it went to $18.58 today. Okay, so let's say $19. Let's say you're going to sell it tomorrow at $19, which is fair. It's only 9 cents over where it is right now. You sell it at 19, so you're down $11 times 26. You're down $286, okay? So $286, and you're selling it for 19. So you have 19 times 26. Let's say you have like $500 to invest. You have 500. You're down 200, right? Yeah, no, you're down $286. So you have 500 to invest, and we got to make you 300. So CCIV, you're going to go out to June 18th because that seems to be the date I like. You're going to buy the $17.50 calls, and you're going to pay $2.50. You're going to go out to June 18th. You're going to buy 2 calls for $17.50, and you're going to pay $2.50. Okay. So you have 2 of them. That's $500. We need to make you a total of $800. Gets you a little above even. Anything more than $800 is good. So we need the calls. If you're going to get $800, they have to be worth at least $4 each by June 18th. So CCIV, $17.50 is your strike. So for them to be worth $4 by June 18th, the stock needs to be above $21.50. Okay? So the rationale behind this is by June 18th, the stock has to be above $21.50. Guess where it was within 5 days? Within 5 days, it was above $21.80. So again, I'm not saying it has to be outrageous. This is by June 18th. It has to get to a certain price target, which doesn't seem that ridiculous. You're giving yourself 43 trading days. You're down 37%. So I'm going to try and help you make 37% plus back within a month and a half. The stock's not going to go up 37%. You're looking for the stock. It's at 19. You're looking to go up 21. You're looking to go up 12%. It could go up 12% in a day. All of a sudden, they could say, oh, there's news about Lucid, or Joe Montana is driving out a Lucid car, and it looks awesome on him, and the stock pumps up. Okay, I mentioned this morning, and we're going to go real soon. Tim Brown is doing some ETF or NFT thing with what is that stock, Hall of Fame? I know Tim Brown. We're connected. I haven't spoken to him in years. But if he was doing something cool like that, I'm pretty sure he would have told me, or at least sent me a message on LinkedIn or one of these other platforms that we talk on. He did. It's not that exciting for him. So it's only exciting for these companies because they release the news trying to get you to invest in their companies. But Hall of Fame was poop at 5. It's poop at 4. And I don't know. It doesn't look that great to me right now. I would rather be in one of the other places. So I mentioned TCAC. It's off 12% today, probably 3% after hours. But what am I in? I'm in Dolphin. Guess what? Dolphin went down today, but it only went down I don't even know where the, oh, there it is. 1.55%, 1% after hours. So again, it's about picking your stocks selectively. TCAC went down 10%, 12%. My stock went down 1%, and it was a beat up day for NFTs. There was no volume at all. So listen, everybody, please, if you like this video, please share the link, all right? Everything I do is organic. It's all analytics. So please like this video, pass it along, get your friend, get your mother, get your daughter to like the video, okay? My kids watch YouTube all the time. They actually watch my videos sometimes. I tell them, like my video, subscribe to my channel. So please, that's how we grow organically. I'm never going to raise the price on you guys. $3.49, but please pay it forward, all right? Thank you so much. I like this. Have a good evening. This is my new look. Sarah, can you make me a picture?